These are a crucial trading stats you guys have to understand as beginners coming into trading. In episode 9 of today's bootcamp, I'm going to be discussing win rate, risk reward, and EV. I have the terms on the screen right now. This is going to be a short little video going straight to the point. WR stands for win rate, RR stands for risk reward ratio, EV stands for expected value. And for expected value, you need above 0 EV to be considered profitable. This will be very handy later when you start journaling, live trading, and doing, most importantly, your back testing and finding which strategy works best for you statistically and psychologically, because some people can handle lower win rates, some people can't. So if you can't handle lower win rates psychologically, it's better to stick to a strategy or system that's more built for your psychology, emotionally, which is a higher win rate strategy. But let's go over this. Most of you guys should. Win rate is pretty straightforward, obvious. You guys should know what that is. If you don't, win rate just means the percent of times you're winning trades over a long run. So if you back test like 100,000 trades, 100 to 1,000, not 100,000. That's a ton of trades. I've never done even 100,000 trades that are close personally. 100 to 500 trades. It's just the number of times you win over the total number. So if let's say you win 100 trades out of 200 trade sample size, this is a 50% win rate. All right. So it's just your winning trades divided by winning plus losing, which is your total. That's how you get your percentage of your win rate. Risk reward, this is aka similar to what the position tool shows. It does show your risk reward ratio, as you can see, as you move your position tool. Ideally, your risk reward, you want it to be like at least 1. No matter what system you're trading, I recommend at least 1, because when you go into the negatives, it's going to be harder because you have to maintain an extremely high win rate to be at the same level of performance, if that makes sense. You guys will know what I mean when you go to my website, go to the EV calculator page. You will see how high risk reward systems outperform most lower RR systems, because you don't need anywhere close of a high win rate. You don't need to be right too many often. You can be wrong more often than being right and still come out extremely green compared to someone that has 80% at 1-to-1, just because your EV is going to be higher. If you have a 30% win rate at, let's say, 5, 6, 8 risk reward, you're going to be much better than someone 80% at 1-to-1. That's the statistics. You can look up the formula for EV, all right, for yourself. For those that are wondering, it's also on my website, so feel free to check out essentialtradersuniversity.com for more information on these stats. But these are just basic things you just have to understand. Nothing too crazy here. This is going to be important when it comes to back testing and validifying your strategy that you decide to ultimately stick with. So there's not much to us I think I need to talk about here for this stuff. The thing is, risk reward, by the way, I'll go over this real quick. You guys know what win rate is now. Risk reward, it just means how much reward you're going to make per risk. So when I say risk reward of 1, I mean if you're risking like $100, you better be making at least $100 on a trade. Your TP better be at least $100. So 1-to-1 roughly. A 1-to-2 means your risk is $100, but your reward is double that because it's a 1-to-2 ratio. So if you risk $100, you should be making $200 with a 1-to-2 ratio, or aka 2 risk reward. When I say 3 risk reward, that means a 1-to-3 ratio. Every time you risk $100, you should be making $300. And of course, this scales depending on what you're risking. If you're risking 1K, you should be making 3K. So hopefully that just sums up basically what risk reward ratio is for those that have never heard of that term before. It's extremely important in terms of trading statistics and EV. Anything else in terms of statistics for retail traders like Sharpe ratio, I think they're not as important for us to understand. That's something more algorithmic that people need to deal with. For us, we just need to focus on finding an edge that works for our account size and knowing our EV as traders. Hope you guys enjoyed today's video. Leave a like, comment, subscribe, and I'll see you guys in the next episode of the Bootcamp.